back to the channel. In today's video, we're breaking down exactly how Defiance's fund managers tackled the long-standing issue of NAV erosion in their QQQY ETF, and what it means for investors seeking high-yield strategies without sacrificing long-term performance. If you've been curious about how QQQY's updated approach works, why these changes matter, and whether the ETF is now better positioned for sustainability, you're in the right place. Stick around as we unpack the mechanics, the improvements, and the potential impact on future returns. Hey everyone, it's Paul here on my channel, Better Call Paul, and today is day 23 of my 30-day challenge of 30 ETFs in 30 days of the month of November. So today we're going to talk about Defiance's QQQY, which as we all know had a very rocky start, but has smoothed out quite a bit recently. So we're going to go into the website and take a look at what QQQY is. And then I have a little slideshow presentation just to show you what the fund managers did to improve the NAV erosion, how they fixed the NAV erosion, and whether or not it's been working. So first we're going to go into the website and just take a quick look at QQQY. So here we are. QQQY is the NASDAQ 100 Enhanced Option and Zero DTE Income ETF. Currently has a distribution rate of 35%. It's a weekly payer, and the SEC yield, the 30-day SEC yield, is 2.31%. QQQY, the first put-right ETF using daily options, zero DTE, to seek enhanced yield for investors, paid weekly. So they aim to achieve consistent weekly yield distributions for investors, coupled with equity market exposure to the NASDAQ 100. QQQY is an actively managed exchange-traded fund that seeks enhanced income, constructed of treasuries and NASDAQ 100 index options. The strategy's objective is to generate weekly distributions by selling option premium on a daily basis. The fund uses daily options to realize rapid time decay by selling in-the-money puts. Okay, we'll take a look at the performance. You can see that since inception, it's only 34%, which is not very good considering it's been out since 2022. However, if you look more recently, year to date, 15.41%, and 6 months, 25.74%. So just remember that the first year or two of this fund was not very good. So hence the reason why the since inception performance is not very good. Take a look at the distributions. You can see that the last 5 distributions were 18 cents, 17, 17, and then 16, 16. They have been slowly going down as the market has been kind of tanking since the end of October. Prior to that, this was consistently paying out between about 19 and 21 cents a week. Okay, we're going to talk about 3 of the 4 things that Defiance did to fix the NAV erosion in QQQY. One of the ones that is not listed here is the reverse split that they did. Now, a lot of people don't feel that reverse splits are beneficial to a fund, but there is liquidity issues. There's investor perception of a low share price. So there are reasons why they did do a reverse split. But anyway, so strategy number 1, pivot from put selling to call spread. As of May 27th, 2025, QQQY is moving to a new principal investment strategy, maintaining long exposure to the NASDAQ 100 and selling a daily call option spread. So this is materially different risk profile. Instead of betting on the market staying flat or going down via puts, they're now capping the upside via a call spread in exchange for collecting premium. That means they can generate income, but also participate in some of the index's upside to a point. So by participating in some of the upside, they will reduce the NAV erosion. Because of this shift, they expect more full participation, relatively speaking, in market gains, which should help NAV retention over time versus the previous put-heavy model. So the second strategy was the change in yield target. With the new strategy, QQQY is targeting a distribution yield of approximately 30% annualized as opposed to the very aggressive earlier targets. I believe the earlier targets were closer to 70 to 80%. So this is a cutback in yield ambition, likely designed to strike a better balance between income and preserving NAV. The third strategy is distribution frequency change. So Defiance moved from monthly distributions to weekly distributions. Weekly payouts better align with their daily options trading strategy. So cash flow is smoother and more predictable from their premium generation. So more frequent distributions also helps investors feel like they are getting the income more regularly, but from the fund's perspective, aligning payouts to how they generate the income, which is daily, helps reduce cash drag or mismatch. Okay, so the bottom line, yes, Defiance recognized that the original QQQY strategy, selling daily puts aggressively, was causing unsustainable NAV erosion, especially when distributions included a lot of return of capital. It took concrete actions, reverse split to structurally boost NAV per share, and more importantly, a strategy overhaul to daily call spreads and lower target yield. The new yield goal of 30% is more conservative relative to prior payouts, which suggests they're prioritizing sustainability over maximum income. So whether the fund will now maintain NAV over the long run depends on how well they execute the call spread strategy, market conditions, costs, and how option premium evolves. Okay, so what's the verdict with QQQY? Have the fund managers managed to fix the NAV erosion and save this ETF? Is it one that you should own? I have been adding to my position, and so far I've been happy with it. But let's take a look at some of the numbers since inception and see where we're at today. So since September 11th, 2023, the share price was $60.42, and that's adjusted to the reverse split. By April 7th of 2025, it had dropped down to $23.04. So obviously, like I said, the first couple of years were terrible for this ETF. Now, since April 7th, 2025, the share price hit a peak of $26.32 and is now sitting at $23.82. So you can see instead of dropping from $60 down to 23, which is massive, $37 drop, it's fluctuated only $3 up and back down again since April 7th of this year. Now the distributions since April 7th were initially 24 cents, then 29 cents, still a little bit high, but then dropped down into the 18 to 19 cent range for the most part. Sometimes it would go up to about 21 cents, sometimes down a little bit again, but on October 31st, we finally saw our first drop below 18 cents when it went down to 17 cents. Now for the last 3 weeks, it's been at 16 cents, but we all know that the market has been extremely volatile for the last 3 weeks, and the NASDAQ has dropped considerably. So it's understandable that QQQY's distributions and share price have come down, but we can see that it's not dropping the way that it used to drop, right? They're not overpaying, they're not giving you rock, and they're able to maintain the NAV. And I think the next time the market goes up, we have a little bit of a bull run, you'll see that the share price of QQQY will go up again. So now is probably actually a good time to consider buying more shares of QQQY. Anyways, guys, that's all for today. So until tomorrow, bye for now.